Good day all. Ira Epstein of Linn and Associates with your metals market update, and this is for Monday, the 20th of May, 2019, and we're just approaching about 3:55 in the afternoon. Interesting day. While the gold market is trying to close a bit higher right now, remember we're still not up to the final settlement. We've already settled in terms of where it's going to be, but the market trades until 4 p.m. There were two more missile strikes at Saudi Arabia today. Their air defense system shot them down. The Saudis think it came out of Yemen with the Houthis again, who have said they're going to attack, and of course they're denying it. Iran doesn't do it, they don't do it, but meanwhile the missiles are flying. Now you can imagine if one of these missiles does get through a system, what it's going to mean. So the gold got a little bit of a bid, and the silver turned around nicely. Copper still under selling pressure, as is the platinum. The stock market stayed under pressure. There's been no resolution that I can see so far of any of the trade wars. The tariffs were lifted between the U.S. and Canada now, and I believe Mexico, and now the question is, can we get these trade deals done? When we take a look at gold, you can see how the chart is still in basically a down thrust as the market has worked lower. It tried to rally just recently, and this pattern was trying to get an up thrust going, and I would have had it labeled as such. But then last week we settled back down. If I have to give it a down thrust because you've got to start a pattern somewhere of higher highs, higher lows. The bias is down because you're under that 18-week moving average of closes, which comes in near $13. And this is probably one of the more frustrating markets that traders have had because it doesn't break out and hold to the upside or downside so far. You can see this right here. Let me just bring you back. You had two breakouts to the downside, they didn't follow through. You then went up like you can see, and all of a sudden you're giving it all up. This is what the trade headaches come from, because you're not following through one way or the other. Nor are you trending. You have a pattern of a lower low and a higher high. You have a big nothing in this market. And if you looked at my weekend edition of my metals update, I showed you on the monthly chart how the market has been stuck. It's interesting that the market failed against the 100-day moving average of closes. On this break, where could support be? Well, it might be at the lower Bollinger Band if you can get that low. It hasn't been there recently. You have to go back into early part to latter part of April, middle to later, I guess the right word. Resistance 1285, support 1270.40, but again, not a trend in the market. And momentum is still pointing down and not oversold. So I have two elements here that I'm looking at. The bias is down, since I define bias as it's upside when you're over the 18-day average, downside when you're under it, momentum down, but the market has also had trouble recently getting to the Bollinger Band. It got close to it. Maybe for the time being, that's enough. When you come to the gold ETF, it is more bearish. The market has lower highs, lower lows. That's downside. That's a downtrend. It's confirmed because you're under the 18-day average, so the bias is down and momentum is down. You literally have to get over this resistance point of the upper Bollinger Band on the current chart and 100-day average to knock the trend out. That doesn't mean you can't get rallies. I'd look for resistance at 121.16. In GDX, it's different. You've got the higher high, lower low. Where's the battleground? Take a look at how many days you're hitting the 18-day average right here. That's your battleground. This is a market that also, notice the black dashed lines, they're the Bollinger Bands, which are an algorithm designed to keep the market trading within it. Therefore, you've got a lot of sideways action going here, not going much of anywhere so far. The gold-silver ratio still biased overall to the upside, whereas gold is gaining on silver. Silver did get a little bounce today, but that's to be expected. What are the odds of staying under these black lines? 5% of the time. Therefore, when you closed under it right here on this day, which was last Thursday, and you did it on Friday, all that it is a market that's gotten ahead of itself, and this little pullback into it today doesn't do much, doesn't really change anything. You're still riding that lower Bollinger Band. Admittedly, you're oversold. You don't have this slow stochastics embedding. One of the numbers is under, in fact, they're both under 30, so I consider it oversold, and you're not trending. A very difficult market. In the copper market, I see the trend is down. You still have lower highs, lower lows. This is an embedded reading, so the market converted a while back from being a market that was oversold to locking in a downtrend. We're having attempts at rallies, and they've been getting sold right along. If the market can go into a washout phase, I'd then start looking at the lower Bollinger Band and see if that number can offer any support. It's probably around 269 level. In the platinum market, this is called running the lower Bollinger Band with the embedded reading. Right through there. I can't begin to tell you where support comes in on this chart. It just is staying very much in a bear pattern. I can tell you I would expect resistance at 846, but I'm not saying it'll get up there. In the palladium market, you've got divergence. You have momentum pointing up. You've got the swing line with lower highs, lower lows down, and bias down. To get the trend reestablished, you need a couple of things. Number one, you've got to stop pointing up in the momentum. It's got to start turning down. And ideally for the bears, you start making a low under that 1302.40. Where's the resistance? The resistance is back at the 18-day average, 1343, and the number the market cannot afford to take out is this number, this high of 1350. If it does, what it presents to the market then is you'd have a higher high, a lower low, you'd have a big nothing market right into the 18-day average or slightly over it. Last in the dollar index, getting close to the upper Bollinger Band but not hitting it again. Overbought, not in a trend. And I realize people are going to say the dollar's at a 2-year high. I read the articles just like you. But if you're a chartist, you're always looking for what? The chart pattern. And if it's in a trend, it's normally making, if it's an uptrend, higher highs, higher lows. Overall, we can see how that is. And if you go to other charts, you might see that too. But that's not how the daily chart setup is. It's a lower low, a higher high. It's more of a trading affair than it is a market that's just set in and is running again. It's not doing one of these established runs. This was a little better. You had the higher lows, higher highs, and you were running. You don't have that right now. We discuss this and a heck of a lot more in our Linn and Associate research. Now, we cover a lot of markets, and you don't have to get all these reports. We do them by categories right through here. So when you go onto our website, you're able to choose which ones you want, what categories you'd like to get the information on. It'll get into your mailbox, or you can just get it right inside of our 2 trading platforms or your mobile platform that we have as well. We have a Java platform, a web-based platform, and of course, Android and iPhone platforms. All this comes in there, or whatever you choose. We'd like you to see our information because you'll see it's a bit different. We're commodity people writing for commodity traders, users, commercials. It goes right on down the line. Give us a call, or you can go to our website, sign up for it, and you can click right up here if you want to do the same as well. That'll take you right to the front page, and you sign up there. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.